This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Welcome to another episode of Financially Fit Radio. I'm Corey Sickles, representing the team here at Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about the insights on today's show, don't hesitate to reach out to us. You can give us a call at 614-760-0670 or visit us online at safeharboroh.com. And while you're exploring our website, be sure to navigate to that radio page. There you can catch up on previous shows and even subscribe to our program through popular podcast platforms like Apple Podcast, Amazon Music, Google Podcast, Spotify, and even in YouTube as well. For engaging visual content on various financial subjects, feel free to drop by our YouTube page as well. You can just type in Safe Harbor Retirement Group. You know, we're here to address any inquiries you might have or to arrange either an in-person or virtual meeting. And remember, all of our meetings are complimentary and carry no obligation. Your financial well-being is our priority, so let us know how we can assist you best. Well, today we're going to talk about the advantages of managed portfolios. We use managed portfolios for our clients when we invest in the market, and I think it'll be a great topic to, just to discuss some of the advantages of that and get also a little bit of an overview of, how it actually works here at Safe Harbor Wealth Advisors as well. But before we dive into that topic, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
Well, I'm doing great, Corey. Thanks for asking, and thanks for having me on the show today. This is going to be a good one. I think a lot of people don't understand what it means to truly have an actively managed portfolio, and that's why I'm excited about this one today, because it does make a huge difference, and you need to understand it. And the majority of our listeners out there, where they think, well, that doesn't really affect me. No, you've got some type of portfolio, even if it's just a 401k, you have investments, you have retirement accounts, so this is critical. I'm glad we're talking about it. I've had a great week, just really got a lot done out there outside this week, hopefully before winter hits,
Oh, yeah, Tony. I like October. It's a great time. Halloween's actually one of my probably favorite holidays.
Yeah, me too.
See all the kids get all dressed up, pass out some candy.
Yeah.
We do a little bonfire at our driveway with some of our neighbors. So that's always a good time. Hopefully the weather will, cooperate. Won't be too cold during that time, or maybe not even rainy as well. But I think it's a great topic to be able to talk about today. Obviously it's one of the things that that we do, that this is how we invest our clients. Being a registered investment advisor, we have actually two options here at Safe Harbor Wealth Advisors. One is we could take control of our own clients' money, manage those assets ourselves, or we could partner with somebody that actually has portfolios that we invest our clients' money into, which is that is the option that we chose to do. And a lot of that is it allows us to focus more on the clients. We don't have to worry about on a daily basis of trying to move things around or invest in different things and things like that. It allows us to really focus on our clients and help them, reach their retirement goals. But the big reason, one of the biggest reasons why we do that is again, we work with Gradient Investments. We've been with them really, my dad started using them all the way back in 2009. Obviously I came into I moved from Nashville, Tennessee, back up to here in 2012, and have been using Gradient Investments really since that time frame as well. And one of the nice parts about working with Gradient is and this is just in general with managed portfolios, but they have all this professional expertise. Mike Binger's the president there. He's been on our show. He's talked about it. He's talked, about some of the portfolios as well. But we're able to use their expertise. Most of the money managers there have 25 plus years of managing money. When you look at Gradient Investments, they're managing about a little over $5 billion of assets of other registered investment advisors as well. So by using that, by having someone that has that professional expertise, Tony, they make all the investment decisions on our clients' behalf. It allows them to understand. Obviously, they understand the financial markets, the investment strategies, and more importantly, all the risk management that goes with that as well.
Well, yeah, and I know I like the main reason so you can focus on the big picture, the overall picture. I like that. If you were doing day-to-day trades and portfolio management, it takes your eye off the big picture for your clients and really servicing their immediate needs. And I like the fact that you work with a company the size of Gradient Investments. It's not a big box company where you can't talk to the main person in charge. I mean, you have a relationship with the president of Gradient Investments. We've had him on our show numerous times, your show here. And that is a huge advantage. I don't know if our listeners realize how critical that is. And they are actively managing that money. And they have years and years of experience doing this. So I think that is huge. And actively managing, we're going to get into more of what that actually means. If you just choose a high, medium, or low risk in your 401k and forget about it, that is not necessarily being actively managed, that's for sure. And you don't have a quarterback like a financial advisor looking at your big picture and working directly with them. You can pick up the phone, call a portfolio manager, and put them on with your client, can't you?
Yeah, I think that is one of the unique things by being we're independent, but also by working with Gradient Investments. If a client of mine or even a prospect has a question about how they manage that particular portfolio, or maybe why they bought or sold a particular stock, one of the unique things is we can get them on the phone and they can address our client or prospects questions at that point in time. And one of the other unique things that we do here as well, and we normally do this the end of September, the first part of October every year, but we also bring in one of the managed portfolios to meet with our clients. So we usually get somewhere between 100 to 125 of our clients at it's a dinner. But the nice part is this year we had Keith Gangle come up that manages a lot of our growth type of portfolios, but he's able to answer questions, give a market overview, year to date, how has it done, where do we actually see the market going. A lot of people are worried about it, obviously interest rates, inflation, but 2024 is also going to be a presidential election, so there's a lot of questions that clients want to be able to ask, and it's great to be able to have the expertise from someone from Gradient Investments to be able to answer those questions, for our clients and prospects.
Yeah, and that's something you'd never get with one of the big box firms. That's huge, and I think that's the biggest advantage and the biggest key, and that's how it's actively managed. There's a team there that you can talk with on a daily basis that are making those day-to-day decisions, looking at the big picture, looking at all the forecasting, all the algorithms. They're watching what's happening, and they're making decisions with your money to best protect it. So if there is a big downturn, they're going to minimize any risk, minimize the risk. There's always risk, and there's always years with losses, and there's always years with high gains. But they're there to minimize those losses and maximize those gains. And that's what managed money is all about, isn't it?
It is. That's really what all managed money is about. And here's one of the other things that I really like about it. Obviously, I have another advisor, and his name's Nick Groves. But it allows Nick and I to focus on the client. And here's the nice part about it. Gradient has about around 20 different type of portfolios. So one of our job is to be able to find out what the client's goals are, what they want to be able to do, what their risk level is, And then we're going to be able to, we actually choose the portfolios to put our clients' money into. And then, of course, it's managed by Gradient Investments. So in reality, when I look at it, you're kind of getting a little bit of a double management. It's our job to be able to make sure we're putting you in the right portfolios, and then it's Gradient's job to be able to manage those expectations for our clients as well.
Yeah. Yeah. And I know that it's really important, especially now with the markets being the way they've been. We came out of 2022. We've talked a lot about that. That was a rough year for bonds and stocks. And this year we've seen some gains. But again, like you say, we're headed into a political year. There's been some ups and downs this year. So it really is important to have managed money, especially moving forward, isn't it?
It is. And one of the things that really allows us to do is, we have that customized approach. Everyone's different. Everyone's a little bit unique. And by having managed portfolios, it allows us to, really align our financial goals or our clients' financial goals, the risk tolerance, the time horizon. But that it allows us to be able to really, tailor that to whatever that client needs. And everyone's different. So everyone's going to have a little bit of a different, solution or different flavor of portfolios that we're actually going to invest those funds into based upon what they're trying to do. Another thing, Tony, is, it's time saving, right? What I mean by that is it's time saving for us because we don't have to go in on a daily basis in order to figure out what we're going to buy and sell and trade and all that stuff on a daily basis. But it's also time saving, for our clients as well. They don't have to worry about going in and trying to ask questions about what stocks or mutual funds or anything like that to be able to buy as well. So, by having a managed portfolio, you really we delegate those tasks to professionals that truly know what they're doing. They're doing that on a daily basis, which frees time up not only for us, but for our clients as well.
Sure. Yeah, and there you go, and that's huge. And I know that a lot of people just put their money somewhere or with a person or have a financial advisor like yourself, and then maybe they don't think about it until they look at their account balance at the end of the year or once a quarter and say, oh, what's going on? But it is good to know that on a daily basis, there is somebody actively managing that. You're looking at the big picture. Gradient Investments is looking at the markets and where that's headed. And no matter what stage you're at, typically some of your retirement money is in growth. So you do need actively managed money in those accounts.
Yeah. And I think it's also going to give an opportunity, for risk management as well, right? So these portfolio managers at Gradient Investments, they're really trained to manage risk by adjusting the portfolio asset allocations, investment strategies in response to what's really going on in the market, not only today, but what they actually anticipate, short term, medium term, as well as long term as well. So this can really help our clients, protect their investments during market downturns. And then you also take advantage when the market is going, when it is going up as well.
Right. Well, and I think that's huge. Let's talk some more about that after the break. We should take a quick break here, Corey. But before the break, let our listeners know. I know you always have a special offer for our listeners. You set aside some appointment times for them if they have questions, want to come in and get a plan started or get a second opinion on where they're at, right?
That's exactly right. For our listeners out there, you can always give us a call at 614-760-0670. Or you can visit our website at safeharboroh.com. Again, we're here to help and guide you to make sure that you can have the best retirement that you can. And really the best way to do that is to put a financial plan in place. We talked about that on last week's show. Feel free to review that if you really want to know what the components of a financial plan are. But if you already have one in place, we can be that second set of eyes and provide you a second opinion as well. That's one thing your current advisor can't do is provide you a second opinion. So give us a call at 614-760-0670 or visit our website to set up a complimentary, or visit our website at safeharboroh.com to set up that complimentary no obligation meeting with us.
All right, that sounds great. And listeners, stay tuned. We're going to be right back with more of Financially Fit Radio and our host, Corey Sickles, after this.
There are 96 different months you could file for Social Security benefits. There's over 9,000 combinations if you are married. But that's not all. There's advanced filing strategies that can also be used. By the time you factor it all in, there are over 20,000 calculations that need to be run to find the best way to file for Social Security benefits. To request your complimentary Social Security Maximization Report from Safe Harbor Retirement Group, visit safeharboroh.com. The Social Security Maximization Report will tell you exactly what to do and exactly when to do it.
Welcome back to Financially Fit Radio. If you'd like more information about today's show, don't hesitate to reach out to us. We're here to address any inquiries you might have, or, to arrange either an in-person or virtual meeting. And remember, all of our meetings are complimentary and carry no financial obligation. Your financial well-being is our priority, so let us know how we can assist you the best. You can give us a call at 614-760-0670 or visit us on the web at safeharboroh.com. Well, Tony, we've been really kind of talking about the advantages of managed portfolios. And, one of the other things I kind of want to talk about too is everyone kind of goes in and checks their balances on a daily basis. So not everybody, but many of my clients do, or you're probably going to at least check them out every time you get a monthly statement and things like that, right? Yeah. And then you kind of, if you're managing it yourself, then you might be making decisions, and some of that could be emotional. That's one of the nice parts about working with managed portfolios. You take that emotion out of it. You have an experienced or professional looking at that. But one of the things that obviously that Gradient Investments does for us with our managed portfolios is they regularly monitor, and they also do rebalancing of those investments, on a regular basis as well, right? So what this allows you to do is really it ensures your portfolio stays in line with your investment objectives as well. Now, some of them are a little bit more actively managed than others, obviously, because maybe you have more stocks in one particular portfolio or not.
Sure.
But the nice part is you do have a professional that's looking at your investments and then, making those changes. And the one thing I do want to kind of say is this. Here's the nice part about it for our clients and prospects. If I put them in one of our portfolios, and let's just say it's we have one called the Gradient 50, which is 50 blue chip type of stocks. If they make a change, everyone in that portfolio receives that change. It's just not one individual.
Right.
So the nice part about that is they're globally kind of looking at everything. And when they make a change, not only are my customers making a change, but all the money that they have invested in that particular portfolio is getting that change made as well.
Sure. And that's huge. And I think that's great. Now, you mentioned rebalancing a portfolio, Corey.
Yes.
And that makes me think of something that when people first meet with you and when I work with you, you look at, if our listener came in, you're going to look at where they're at, what stocks they have, and they might have an IRA or a 401k. And a lot of times you find that they're doubling up and their portfolio needs rebalanced. In other words, they've got competing stocks, or they've got too much of one stock because they're in different mutual funds that contain the same stocks. Do I have that right?
That's correct. One of the things that we do when you come in is we run a Morningstar analysis, and one of the reports we have on there is it's going to show you how much are you really invested in Microsoft or Google or Apple, right? So a lot of times what people think is I'm going to go in 4 or 5 or 6 or 7 different types of mutual funds. What they don't understand is in every one of those mutual funds, 3 to 4% of that is in Apple. So I think that's what you're really kind of getting to. And one of the nice things about when we actually put them in our managed type of portfolios is there's usually not the same companies invested in different portfolios.
Right. So they're not doubling up. There isn't true diversification. Like a lot of people who invest themselves might think, or just go through their company might think, oh, I'm really diversified, but really they're not, right?
That's exactly right. And that's one of the things that we'll actually review with you is when you come in there. It's called our stock intersection report through Morningstar. It's going to show you.
Okay.
It's going to show you where all it's going to show you basically what percentage of Apple is actually truly within your portfolio, or
Sure.
Microsoft or Google or whatever, Meta, right?
Yeah.
It's going to show you all those type of things. And the other nice part about it is when you kind of go through our process, Tony, is we're also going to show you on how you're allocated today. Are you 60% stocks, 30% bonds, 10% international, whatever that might end up being. We're also then going to be able to show you how well your portfolio has actually done compared to a benchmark that Morningstar has based upon your same type of allocation. And of course, one of the biggest things that we're going to be able to show you is what is your risk level with your current portfolio. Does that match your risk level, and does it actually need to be adjusted, to match your true risk level as well? Obviously, one of the things that we find out more than anything else is clients are usually a little bit more aggressive than they actually think they are with their current portfolio. So a lot of times it needs a little bit of adjustment by being able to become a little bit more conservative to follow their risk pattern as well.
Yeah, and making those adjustments and keeping it balanced is so important. And I know that if you work with a financial advisor that handles their own investments, I question how much they're able to actively manage those accounts and effectively manage their client's overall financial picture at the same time.
Exactly. And the other part that I would probably say with that too, Tony, is now you're also kind of get into, behavior management too, right? By having managed type of funds, you're going to avoid that emotional and impulsive investment decisions that a lot of people actually make as well. So they can act, the portfolio managers can act rational. They're an objective third party to help you really stay disciplined during market volatility, which of course we've had over the last couple of years as well. Should I get in? Should I get out of the market? And really, in the reality is, if you're allocated the correct way, you kind of just stay that course because we have a long-term picture. We're not looking at short-term results.
Yeah, and that's really important to understand that. Now, if our clients have questions about this, I know that they can just pick up the phone and give you a call. You set aside meetings. Everyone needs actively managed accounts and portfolios, right?
I firmly believe that. I think it's a good way to be able to make sure you're going to meet your long-term financial goals, Tony. And the best way to do that is, give us a call here at 614-760-0670, or you can always visit us online at safeharboroh.com. Again, we can show you where you are today, and we can provide you what we call our allocation roadmap on how we're going to be able, how you're going to be able to benefit from some of the portfolios that we have here at Safe Harbor Wealth Advisors. Again, all of our meetings are complimentary. There's no obligation. We can also, once we do that review, that's part of your financial plan that we can put together for you. And again, it's so important to be able to get that second opinion, just to make sure that you're doing everything the right way to have the retirement that you want to be able to have.
Yeah, that's the goal here. And I think that's really important. So before we go, what's that phone number and web address one more time for our listeners?
Yeah, for our listeners out there, it's 614-760-0670, or you can visit us online at safeharboroh.com.
All right, well, that does it for today's episode of Financially Fit Radio. Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.